I got the opportunity to join the prop trading desk. So I actually got to see the market from the inside and out, where first I was the market maker.
I'm sure you know who is this. She is Lien. If you don't know who is she, you better go and watch certain channels because she's everywhere. Basically, she's everywhere. She is featured on CNBC, Bloomberg, Market Watch, I believe, Associated Press, and she's based in New York City. And she's an author of many best-selling books. And she has more than 20 plus years of trading experience in the financial markets. What is your trading journey like? How did you started in trading?
First of all, thank you so much for having me here, Karen. I miss Singapore so much. I used to go almost every year, and it's been a very long time. I think my trading journey is quite unique, and believe it or not, in some ways, just came into my life. I remember when I was in college, my major at the time was pre-med. And I know everyone's moms and dads wanted them to be doctors or lawyers. So my mom wanted me to be a doctor, and I was pre-med. The fact that I got queasy at the sight of blood was a really terrible sign that this wasn't going to work out. So thankfully, I went to New York University. They had a kind of a rotational program that let you take different actually required you to take different classes to figure out what you want to do. And one of the classes that I took was macroeconomics. And for some reason, I just loved it. And it was extremely easy. Whereas I remember when I was learning organic chemistry, I had never worked so hard in my life and did so terribly in school because I just could not understand it. Whereas macroeconomics, everything fell into place. So then I transferred over to the Stern School of Business. And when I went over there, we were required to do internships. And I was lucky enough where I got an internship with the Market Technicians Association, which is at the time probably one of the only technical analysis associations out there. And this was in 1996, I think. No one was trading with computers. We were literally charting using pen and paper and circle and X's. And so that's where I learned technical analysis. I fell in love with macroeconomics. I learned technical analysis from, the leading technicians out there. And when I graduated, my first job out of college was at JP Morgan. And I didn't actually start in trading. Once again, JP Morgan had a rotational program in their sales and trading program. And my first job was actually in credit derivatives. And thank God I did not stay because, you remember credit derivatives blew up the entire market. So I would have blamed one of the biggest bubble bursts ever. But I did see how bad it got and why this bubble occurred. And then my second rotation was actually was onto the FX desk, the forex desk of JP Morgan. And once again, I just fell in love with it. It just made sense. We really worked well together. And, I just stayed, I guess. And that was the market making desk of JP Morgan. And at the time, I was a junior trader. And so the euro was just launched. And so they had me price all of the kind of legacy currencies. So I would make markets in the legacy currencies and then just kind of work my way up. When Chase and JP Morgan merged, I got the opportunity to join the prop trading desk. So I actually got to see the market from the inside and out, where first I was the market maker for a while. And then I joined the prop side of JP Morgan Chase. And that group does pretty much in some ways a lot of what I do now, which is that they take a look at kind of the bigger picture, the macro picture, and they also take a look at the daily flow and price action and incorporate that in trades for the banks with the bank's capital. So I did that for a few years. At the time, you may know I graduated college really early at 18. At that time, I was maybe 23, 24, and I looked at what I was doing. I looked at what the woman next to me, who was by that time, 50, 60 years old, was doing. And I was doing the same thing as her. And I said, I can't do this for the rest of my life. That was really at the tail end of the dot-com boom, where everyone was working for a dot-com. So I wanted an adventure. And at that time, FXCM was hiring. They were a very, very small company 25 people. And I said, okay, this is FX, this is .com, let me give this a shot. So I joined them and I helped them start their research desk, helped them grow to a company that was in excess of 500 employees. And after that, another company, GFT, kind of sent it a offer I could not say no to join their company and kind of do the same for them. Eventually GFT got sold, and my colleague Boris and I decided to go out on our own. Throughout this whole time, we've been trading for ourselves, and met many of you in Singapore and talked about and developed trading strategies. And so we had always been, a trader first and an analyst second. So I was able to, kind of fine tune that skills while also delivering, high quality, fundamental articles and research content to the public. So when GFT was at the cusp of getting bought out, we decided to leave, and we went, full time in our own company. And that was in 2008. No, that was in 2000. Oh gosh, I don't even remember. It was a while ago. And since then, that's basically what we've been doing.
A lot of retail traders would like to know, what is a day in a life like in Wall Street?
Typically what happens, I remember when I was at JP Morgan, we would get into the office by 6 a.m. I remember I left my house around 5:30. So we get into the office at 6 a.m. We would sit there. We would read up on the overnight markets, figure out what happened, make sure we're on top of the stories. Then we'll sit together in a group. We'll huddle around, talk about what we think in terms of what could affect currencies that day, share some ideas on what looks good on a fundamental and technical perspective, share some ideas on some of the strategies that we're looking at. And then, we sit at our desk and we analyze charts, and we wait for the opportunity to buy or sell. And, depending upon, what strategies that we're using, we may enter, usually oftentimes traders are entering trades before the New York stock market open, because it's a nice little golden hour between, I would say, about 7 a.m. to 8 a.m. where, before the data comes out, there's a lot of opportunity for short-term trading. Then when the U.S. equity market's open, there's a lot of, business that comes in, there's a lot of response to the stock market open. So you can take on, risk off trades. And then, we kind of huddle up and we listen for any type of client flows that come in. Then there's lunch. The afternoons are more kind of reviewing some of the trades that we put on, and then also looking at any type of overnight trades that we may want to put on into the Asia session. We have coffee, we chit chat, we kind of give each other advice on, our trades, and we talk about, some of the clients that are coming in. And usually the day wraps up around 4 o'clock, at which point, we go for a happy hour sometimes. And I think that really is one of the most important benefits. I would say there's a very stressful period, and the stressful period is pretty much between, I would say, 6:45 a.m. to about a London close, 12. So that's a very, very stressful period where markets are moving, things are trading, we're all trading, we're very sensitive. But come lunchtime, things start to quiet down.
You're one of the very few successful female traders in the industry. So what do you think are the strengths of female traders?
I think one of the main strengths of female traders is that moms like me, you have so many things going on in your life, you can't dwell on the past. And that's really the way I approach trading. I'll have good weeks, I'll have bad weeks, thankfully more good weeks than bad weeks, but I just don't dwell on it. And, Boris, my colleague, is always amazed. He asks me, how, are you able to turn around so quickly, even from on a day-to-day basis? I've been a week-to-week basis. And I just tell him, I just go flat and restart again and look at every single day as a fresh trading day. I don't let, the past affect, I don't have time to let the past affect the future. I just need to keep on going forward. And I think, it's also woman's intuition in some ways where, I have a trading strategy that I've been using for a very long time. It works well. I trust it. And I understand, when it doesn't work, sometimes it's mistakes I've made myself. But having stood the test of time, I believe and I trust in my trading strategy. So even when I have a bad day or a bad week, it's not indicative of, how it's going to perform in the long term. I think women are very evidence-based. And so whenever I develop trading strategies, I make sure that I have a lot of proof to myself that it's something that is, is going to work out before I use it in live market environments and before I teach it to anyone. And in some ways, the men watching this may disagree, but I think women work a lot harder than men. We have a lot more going on in our lives. We have a lot more responsibilities. Given the commitment that we put in every part of our lives, I think, that creates a quality in the kind of the output that we have. And I think that may be unique to, what we do.
It's often said that female traders can multitask a little bit better than men. I'm not sure about that. But
absolutely, because, in the morning, I'm trading, making my children's breakfast, making their lunch, and then also watching the markets at night, because I trade the New York session, the Asia session. At night, I'm making them dinner, I give them baths, I put them to bed, and I trade again. It's a lot, and being able to do all that requires, the ability to multitask. There are so many times when I'm trading from home where I'm running from the kitchen back into the office to check on my quotes, to make sure everything is working out. Thankfully, I trust my trading strategy, so I don't check on it that often.
I'm sure that one of the strategies that you use is the top-down approach, which involves macro analysis. You look at a big picture, then followed by the smaller picture. So can you share with us what is your analysis process like?
I think the top-down approach really is the best way to describe it. I basically look at where the market is as a whole. And quite honestly, fundamentals do not change day to day. Fundamentals, when you've got an outlook for, Australia, for example, and they're in lockdown, they're going to remain in lockdown for a few weeks. And when that happens and when the data is released, that's at least a month worth of a bearish outlook for the Australian dollar. So fundamentals don't change that much, but I think it's important to have a fundamental opinion and adjust it, obviously, when you need to. So I start with, the big picture. I start with, how are these countries doing? What are these central banks saying? Is one looking to move and another not? Are they kind of thinking about different types of policy actions? What are unique social, economic, political factors that may be affecting these countries? And I put this all together in what I call my fundamental heat map. And, I review it once a week because, fundamentals don't change that often. And from there, I form the basis of my trades. These are my fundamental views. And I have my trading strategy, which is called the ZIP strategy. So every single day, my ZIP strategy basically keys off 1 hour charts. So when a ZIP setup forms, I will only take the trades that are in line with my fundamental views. So for example, one day, I may have a Euro Kiwi long position, but I may think, okay, the ECB's dovish and they don't want to taper asset purchases. The RBNZ is the most hawkish central bank out there. I'm not going to take this long Euro short Kiwi trade. But then I wait. If I get a short Euro Kiwi signal, then because it's in sync with my fundamentals, then I'll take the short Euro Kiwi trade. There's one additional component to it, which is sentiment of the day. So we talked about how my strategy is a top-down approach. We start from fundamentals plus technicals, and then the last piece of puzzle is sentiment. And sentiment is basically, what is the market feeling that day? Is it risk on, risk off? Is it feeling much more bearish Kiwis than Euros? If that's the case, even though I may be bearish Euro Kiwi from a fundamental perspective, and even if I get my Euro Kiwi zip sell signal, if we're getting a disastrous market sell-off, Kiwi is most definitely going to fall more than Euro because it is a more sensitive currency. Then that may tell me it's time to avoid the trade. But if all the things line up where I am bearish Euro Kiwi, I get a Euro Kiwi zip sell signal, and Euro Kiwi, they're both kind of moving the same amount, nothing's really going on, that is the perfect setup for a trade. So that's basically my analysis, top down with fundamentals plus technicals plus sentiment.
Yep, that's really great, Kathy. And one thing that is prevalent in the retail trading industry is that a lot of the retail traders nowadays, all they focus on is technical analysis. It's very important for retail traders to change the mindset to focus on FA as well as sentiment analysis. So, Kathy, can you share with us how can retail traders master fundamental analysis and also sentiment analysis?
Well, master is definitely not so easy, but I think that, it really just takes time and experience. I'm sure Singapore has a financial newspaper, but reading the Wall Street Journal, reading the Financial Times, that's a really good way to get a general broad-based perspective of what the biggest stories are in the world. So, whatever makes the front page news, like the infrastructure spending bill in the US, or, for example, a trade war, that's going to be some of the big stories out there. And then once you've established the big stories, try to look for, a website that focuses on forex, if that's what you're trading, focuses on the individual currencies. I'll give you one secret. The person that I read that I think is really, really good is Mark to Market. And this is a gentleman that I had worked with a very, very long time ago. He's, much older than me. His name is Mark Chandler. He used to work for Brown Brothers Harriman. He does a fantastic job of fundamental, big picture forex analysis. So I would read him. You can read me if you want. And that would give you, I think, enough to start getting a little bit more comfortable with fundamental analysis. And once you keep on top of the big stories, like I said, they don't change very often. Those are really good places to start. I think it's really important to be on Twitter, because Twitter has a lot of kind of real-time, really interesting information on that keeps you on top of the short-term fundamentals. So Forex Live is really, really good for that. They're a really good Twitter feed to follow for, fundamentals. Also the general stuff like Reuters, Wall Street Journal, New York Times, they all have Twitter feeds. But I think Forex Live covers everything that you really need to know on a short-term basis. Whereas, Mark to Market and the Wall Street Journal, things like that are kind of longer term. And then in terms of books to learn about how you can master Forex fundamentals, I've got a book called Day Trading and Swing Trading in the Currency Market. And also, there are Forex courses. I have a Master Forex Fundamentals course on BKforex.com. Those are all good resources to learn how to do it. But in terms of what's going on right now, I think you've got to go to the market news sites and some of the ones I just talked to you about to get a handle of what's not only how to analyze markets from a fundamental perspective, but how are markets moving on a fundamental perspective right now.
What do you think is the main difference between pro traders and retail traders?
Well, it's actually kind of really interesting. Pro traders have a lot of advantages that retail traders don't. It's kind of like when they say, when you reach the elite level in life, you get a lot more freebies than when you are struggling just to make a dime. So with pro traders, when you're sitting on a bank desk, one of the biggest advantages is that you get to ride the flow that's coming into the sales desk. So you get to hear them say, XYZ hedge fund wants to buy 100 million euros. And there's no rules on the bank level. Forex is probably one of the least regulated markets on the interbank level. And so you can just hit buy before that a hedge fund comes in and be able to ride it for a few pips. And so that's something that, you and I can never do because we don't have the advantage of sitting at a desk and hearing this flow. Also, you're trading someone else's money. So usually these traders can take much, kind of bolder positions because they're still collecting a salary. They're still collecting a salary, while they're trading the bank's money. If they lose money, they're still going to make their minimum salary. They just won't get their bonuses. So they take riskier bets than you and I may because we're trading our own money and we're trading for other people. So I think, we're in very different positions. We're in a much more real life position than some of these bank traders.
This is a question that a lot of retail traders would want to know. What trading strategies do banks normally use?
Well, so in terms of the bank trading strategies, there's a few strategies. One is flow-based, which we just talked about, how, they get the volume that comes in, or, it's actually really terrible. I remember sitting on the bank desk and the salespeople would have a relationship with the traders, and you would have a bank call in and say, give me a price for Eurodollar 100 million. And because the salesperson knows their client and they know they're going to buy, they're going to tell the dealer to price up, and the prop traders would start to push the buttons and buy. Anyway, we can't do that. Another very popular way that we can do is volatility expansion trades. and or volatility trades, where a lot of times what these banks will do is that when they see volatility get really, really compressed and trading ranges get really, really compressed, they take trades expecting an expansion in volatility. On the flip side, what they actually love to trade is volatility compression. When prices get really overextended, they like to 2 standard, 3 standard deviations. They love to trade the snap back to normal. And so those are two, strategies that, you and I, can actually do, because that's reflected in the price action. So those are some of the most important strategies. Another one is kind of the event-driven strategy, where, we do have the beginning of pandemic, I'm sure there were a lot of bets around that. So any sort of big events, they love to scale into and have these big, positional bets.
And you have traveled to many different countries to speak and met many different traders from many different countries. You also have your own students. So based on your observation, what are some of the common mistakes made by retail traders?
I think there's a lot of mistakes that retail traders make that makes it challenging in the beginning. First and foremost, one of the questions I get asked most often is what's the best currency to trade? And, while there are some, currencies that are more suitable to newbies than others, I think it's much more important to understand the type of trading strategy that you have and what currencies work best for that trading strategy. So it's not about, euro dollar could be very much the same as dollar yen or Aussie dollar, for example, in trading. But it really depends upon your trading strategy and whether your stop for that strategy is appropriate for the euro dollar and the pound dollar, for example. Another huge mistake I see is that everyone focuses too much on the entry and not so much on the exit. So they're focusing on looking at all these strategies and when they can pinpoint the best place to enter. But, I remember when I was at JP Morgan, I sat next to 2 traders, one who went long and the other one who went short euros at the exact same time. And at the end of the day, they both made money. Why? Because one got out for only 10 pips. Another one rode that 10 pip move against him and got out for 50, 60 pips. So that had absolutely nothing to do with the entry, because they both entered opposite positions at the same time. It had everything to do with the strategy and exit. Newbie traders do not spend enough time on what I called protecting their profits. And that really is about, trade management, about learning to how to protect your profits when you have them, and learning to be able to have the right type of exit for the time frame that you're trading. Another way to look at this is, let's imagine that you try to adhere to the perfect 2-to-1 risk reward ratio. And let's imagine that you're day trading. So what's a good stop for a day trade? Let's say it's 25, 30 pips, right? So if your stop, if a day trade is 25, 30 pips, that means that if you want the 2-to-1 risk reward, your target has to be 50 to 60 pips, which, in that isolated time that you are sitting there to trade, could be very, very difficult to achieve. Because on some days, 50 to 60 pips is the entire move on a 24-hour basis. And that may not be the time that you're willing to sit there to trade. So you need to be realistic. You need to understand that exit and what you want as a profit target is just as important as where you enter and where your stop is.
Totally agree, Kathy. A lot of traders also ask me about where to enter. Not many people ask me about where to exit, where to cut loss, where to take profit. So that's a very important point that you mentioned. So you have met so many traders all around the world. What do you think successful traders have in common, and how can a typical retail trader become successful?
So, I think there's a few characteristics of success. Number one, being patient with your trades. Obviously, if it goes against you, then you may want to reconsider your trade. But if you have a strategy that you trust, like I do, and you have a certain stop and you have a certain target that you use every single time, then you have to be patient with it. You can't just sit there and monitor every pip move. You have to be patient with your trading strategies. You can't overtrade. I've certainly been guilty of overtrading. And whenever I overtrade, it's a really bad idea. You always want to make sure you have a stop. And also, you may want to reconsider the 2-to-1 risk reward ratio. Almost every professional trader that I've met have some sort of that actually survived in the market, have some sort of mechanism. When the position goes, to 1 times risk, for example, they're starting to protect their profits. They're starting to either move stop to break even, or basically not allow it to completely go against them, especially when you're going for a big move. I mean, imagine you're going for a swing trade. You have a 100-point stop, 200-point target. If it goes 100 points against you, you should be protecting something. You should at least go bring your stop to break even. And when you don't do that, I think that not only psychologically really hurts, it makes it difficult to trade again next time, but I also think it's a mistake because, you're putting a lot of money on the table. You're not really trading as defensively as you really should, because at the end of the day, currency markets move up and down. And so you want to make sure that you can achieve as high accuracy and win as often as possible. In order to do that, you need to protect your profits.
A lot of people might view this video and then they're like, of course, you guys can succeed. You guys have a finance degree. Do you think that you need a finance degree to become a successful trader?
I don't think so. I've met a number of successful traders that don't have finance degrees. I've met a lot of traders, doctors, lawyers, regular business people who are very, very successful. And I think a lot of the skills that I have can be learned. I mean, you teach a lot of traders and they become successful. Same, story on my end. It is helpful to understand macroeconomics and fundamentals, but it's not absolutely necessary, because if you keep reading these stories in the Wall Street Journal, the Financial Times, and some of these other sites that I tell you about, you'll start to get the hang of it, and you'll start to understand what is driving the markets. And within a month or two, I think you can also get a really good grasp of fundamentals. I think you can have your day job and you can still be a good trader. Yeah, and what it takes is finding a good strategy, a strategy that works for your life, basically. I've said it a few times already, but I can't emphasize it enough. For example, if you work 9 to 5 in Singapore time, and you have dinner with your kids, and you only have time to trade at the end of the day when everyone goes to bed, then find a strategy that works best during that time. If you have no time to check the markets, then you want to look for swing trading strategies, and you want to study those. You can still be successful and have your own outside, or have your main career and still be a trader. And it's really about spending the time to research strategies and to research things that would fit your own lifestyle.
You're at this position in your life where you are a trading guru, and then you are featured in many different media platforms, and you're teaching people all around the world. So what's next for you?
I think I could be 60 years old and I'd still be doing this. I love talking to people. I love teaching. This pandemic is really interesting because some people have gotten very lonely as a result of the pandemic. I don't feel that way at all. I'm chatting with my clients constantly during the day. The fact that they're at home too gives me, it makes it much more engaging. And, I think that I'd still be doing this when I'm 60, 70 years old. Maybe not as often, but certainly for myself.
There's like 30 plus years until you're 60, right?
No, I turned 40 this year, actually.
Totally don't believe that. Mid-30s, something like that?
No, I turned 40 this year. Okay. We all have good Asian genes.
Where can they find you, and also how can they stay in touch with you?
Yeah, so you can read my research notes at bkassetmanagement.com. And if you want to get my strategies, trade ideas, courses, you can go to BKforex.com, BKforex.com. And you can always email me if you have any questions at Kathy, Kathy, at BKforex.com. Connect with me on Twitter, which, I've been a bit more active on than in the past.
Those Instagram accounts are not hers. Those are impersonators.
Yes. I do not trade crypto. There's nothing that I say about crypto out there. I have no Instagram account, and I have no public Telegram account. I just use it and no WhatsApp either. I mean, I use WhatsApp to talk to Karen, but that's about it. But I have no official WhatsApp account. I have no official Instagram account. So if anyone is asking you for money or to do something on Instagram or WhatsApp, it's absolutely not me, and not on Telegram. either. And I do nothing with crypto. So if anyone tells you anything about crypto from Kathy Lien, it's also an impersonator. So please be careful. I tried really hard to shut them down. They actually ended up shutting my own personal Instagram account down that I had for 3+ years in favor of an account that was open for a month. So the only platform that I have is Twitter, and I have a BKforex YouTube channel, and that's about it.
Thank you, Kathy, for this amazing interview and also for sharing your experience. And with that, I'll talk to you guys in the next interview episode. Bye.